Good morning, everybody. This is Gary Fullett doing a little YouTube video. It is 7/12 on November 6, 2019. I want to show a current chart of the E-mini daily S&P chart. It's a very interesting chart because it shows some very Wyckoff-ish behavior in the markets that I think will be something that you'd want to review. But first, let's do a disclaimer. Substantial risk of loss in trading commodity futures options. Past performance not indicative of future results. The opinions of those are of Gary Fullett and not to be taken regularly to buy or sell commodity options. This is for the teachings from Richard D. Wyckoff. Also, disclaimer in the upper left-hand corner as well. And I'd like to offer everybody 2 free weeks of my Wyckoff daily newsletter. Also, a one-on-one webinar between you and I. Then we'll be able to discuss anything you'd like to discuss. Trading at Wyckoff or in general. We record it for you, and you could have the link as of the requesting. So this is the E-mini S&P, as I mentioned, and this is a market that has shown the uptrend very nicely. So I want to start out really with the behavior of what's been happening over the last several weeks. We have a market that started to work down here, and the volume increased, and there was selling that occurred. The next bar here was a smaller range bar with a little bit less volume, so some type of stopping action behavior in the high-end close indicating there's some buying at this level here. It does not set up an edge to look to buy the market, but does show us the market's ability to stop the downside slide. We then have a retest into the resistance area, and the market comes back down. As the market comes back down, it is met with buyers again in the high-end close. Very important that the market gets buying at lower levels. The market then works higher. We then get to the point in which we get to another resistance area. This market does not sell off at all. We have previous lows here. We mark those previous lows here. The market makes a slight penetration of those previous lows. We call this a spring formation in which the market penetrates a support and closes above it. This is an entry point of the absorption process in the markup phase with the stop underneath the spring level. The market then proceeds to go higher, then forms another edge or another spring area for the edge to possibly buy the market here. The trade is a low risk trade because the stop is under here. The potential is for the market to move higher. So it's a low risk trade for the most part. Obviously, depending on your situation, it may not be something in your parameters, but it's a trade in which it defines the risk of underneath the spring low. Market then proceeds to go higher, and then the market shows us that it looks like we're correct in our analysis. We then form a nice little range here. The market then makes a slight penetration of these lows in another spring formation, which leads us to a market that then gets to the point in which it's another spring, another potential edge to buy the market with a stop underneath those lows. The reason is if the market makes new lows, it can start a down channel. The market then proceeds to mark higher. This was last Friday's close, November 1st, 2019. The market then goes up on Monday, but the range is not as great as we'd like to see it because it didn't mark up. And yesterday the market closed on its lows. So here the market may be acting a little bit tired, and I would caution against any type of corrective move here. But without the supply in the market, the trend is up, and the ease of movement of the background is up. But you can see that the reasoning of buying this market is if you have buying in the background, buying has established itself, the market then makes a penetration of support, edge to buy, penetration of support, edge to buy. The high-end closes tells you the bulls are winning. Stop underneath each low. Market marks up with no selling pressure in the market. So the market proceeds to work higher. But I'd be cautious in this little area here. The market still is bullish, but we have to be very careful of any type of corrective behavior or selling into the market. So I want to thank you for listening to this short-term video on absorption. This is called vertical absorption. As the market continues to go higher in a sloping fashion, it's called vertical absorption. In order to look for trades in the vertical absorption processes of Wyckoff. Any questions, feel free to contact me directly. I will put my email address here, and you'll be able to contact me. Any questions about the offers or anything of that nature, his email is riskybiz99@aol.com, and any questions, feel free to ask. Again, thank you for your time and listening. Hope this webinar, YouTube, was very helpful. Thank you and have a great day.